Good evening. My name is Nelson Raphael, and I serve as the Economic Empowerment Chair for the Emerging 100 North Metro Atlanta chapter. Thank you for joining us for this home buying and mortgage lending webinar. As you can see, today is a little bit different. We have a live audience just to kick off the year. So we're going to go ahead and get started. So the agenda for the event, the purpose. Basically, you guys are here to understand the ins and outs of the home buying process. You're going to meet these wonderful panelists I have to my left, and then we're going to engage in a panel discussion, whether it's your first home buy or home purchase, or it's your second investment property. I'm sure the subject matter experts will have plenty to tell you. And lastly, once we're finished, as a treat for our in-person guests, we will break out into a networking session. So welcome. This event is designed more so to introduce you to the home buying process. Now, many of you guys probably have heard that it can be quite complicated. There could be many pitfalls if you're not properly prepared or have your dream team assembled around you. So by the time this event ends, you should at least have 2 to 3 actionable items that you can move forward with in order to begin the home buying process, whether it's your first time, second time, 4th time, 15th time, 20th time, who knows? So without further ado, let me introduce some of the panelists. Here I have Joanne Smith. Joanne is an Atlanta native with a passion for people. She holds 39 years of banking experience, with over 20 of those years being strictly in mortgage origination. She currently serves as the community development lender for Huntington Bank. She's knowledgeable in Metro Atlanta's local market, engages with community stakeholders, and understands how leveraging DPA sources helps to create mortgage sustainability for low to moderate income first-time home buyers, persons purchasing in low to moderate income census tracts. Next, we have Bilal Sharif. Bilal is a seasoned real estate leader, and proud realtist with more than 20 years of experience rooted in Atlanta's Adamsville community, with expertise spanning brokerage, development, valuation, funding, property management, housing counseling, and technology. He takes a strategic, numbers-driven approach to building wealth through real estate. A self-described mathematician, Bilal reverse engineers deals to align clients' financial capacity with their long-term goals. An early achiever, he became an investment facilitator at 22, a homeowner at 23, and owned more than 20 properties by age 25. He serves on the board of the National Association of Real Estate Brokers, NAREB, and was recently appointed to the Appraisal Foundation Board of Trustees as its youngest African-American member. His past leadership includes roles with the Georgia Association of Realtors and the Atlanta Realtors Association. Bilal is the broker owner of Advanced Realty Concepts and serves as associate broker and team leader of ARC Partners Global at eXp Realty, where he leads a nationwide team of more than 70 agents. His team was recognized in NAREB's top 100 after producing more than $46 million in sales in 2024. Committed to service and mentorship, Bilal is on a mission to redefine the real estate culture for tomorrow's leaders, championing collaboration and empowering others to build generational wealth through real estate. Christine Fleury is the managing attorney for the Stockbridge office of Galbraith Krosner, a premier real estate law firm in the Southeast. She graduated from Emory University with a sociology major and dance minor in 2011 and graduated from Georgia State University College of Law in 2014. She became a member of the Georgia State Bar in 2015 and has been practicing real estate law since 2017. She has closed residential, commercial, and investor deals. She is part of the team pulling together the 100 Homes Initiative in Atlanta, which focuses on putting 100 people in the TGS community in new homes or investment properties. And last but certainly not least, Donovan Duncan, a dynamic, results-driven professional with over 15 years of experience in operational management, community outreach, client relations, and healthcare services. As an outreach coordinator at NACA, Donovan leads community engagement initiatives, builds strategic partnerships, and expands access to sustainable home ownership resources through impactful outreach efforts. A former U.S. Army officer with more than 16 years of honorable service, he brings strong leadership, strategic planning expertise, and a mission focused approach. His career reflects a deep commitment to service, operational excellence, and empowering individuals and communities through education, advocacy, and collaborative leadership. Please give a hand clap to all our panelists. Next slide, please. All right, so we will now begin the panel discussion. So we have a few questions already prepared. So just wanted to start. Donovan, how did you know you were ready to buy your first home?
I was talking about this earlier with you. It wasn't easy, but for me, it was when it stopped being a dream and more of a goal. You know, it's that time in your life when you realize it's time to get serious. You know, we can play the game all day long, but when you start understanding exactly what's before you and how to take advantage of it, you do that. It was more about understanding about how I was spending my money, where I was spending my money, when I need to spend my money. And once I did that, it became a lot easier for me. Understanding I had to commit to a budget, realizing that, you know, how was my credit being affected by, you know, having my max limits on my credit cards, lowering those down. Just more so just understanding those things to say, hey, this is when it's now serious, it's go time. And then when you're a dad and you've got a, you know, son, you definitely don't want to be in an apartment all your life. You want to make him see just the fact that he could do it as well.
Thank you. Seeing is certainly believing, and definitely understandable. So you brought up a great point in terms of credit. So I'm going to direct this next question to Joanne. What credit score range should first-time buyers realistically target?
Credit score range. Well, I would say first thing, you want your credit as high as it can be, right? For a number of different reasons. You want access to different programs. You want best interest rates that you can get. All of that is tied to your credit, right? Credit scores. But we know everybody's not going to come in with an 850, right? So we want to be realistic. I would say mainly they need to look at about a 640. That seems to be the sweet spot for a lot of programs, right? A lot of my first-time home buyers, they need the extra incentives. 640 seems to be the sweet spot.
So for those of you all listening out there, 640 seems to be the sweet spot. So I'd write that down. Now, ownership is full of surprises. Bilal, could you tell us what surprised you most after becoming a homeowner?
What surprised me most after becoming a homeowner? I guess after my very first purchase, like I said, a little more than 20 years ago, this month, the house was already renovated, but it was 4 bedrooms, 2 baths up top. I had another basement apartment, and I literally was putting up signs for the tenant in the basement before I even closed, and I had him move in before I did. But after we got that first rainstorm to come through in that basement, noticed there's some leaking going on in that back wall down there. So just knowing that I had to immediately go ahead and have some waterproofing done and address some things for repairs, that surprised me most as a first-time homeowner. You know, that's why I tell people, you know, when you're transitioning, getting into home ownership, you want to have some reserves. You don't want to put it all into the home. You want to be able to afford it and have some type of contingency plan in case things like that happen that may not be covered immediately from insurance.
I'm going to ask you to hold on to the mic. So having that liquidity, having that extra cushion just to kind of protect that investment is very key. So I would like to jump over to the legal side. Who should be on your dream team for home buying? Ask this of Christine.
So I always say you start the home buying process with your lender first. You sit down, even before you think you're able to purchase, You sit down, you talk to them. They'll tell you exactly what you need to do to get ready to purchase. And then you'll get that pre-approval letter, because all my agents can say they love a buyer who comes with a pre-approval letter. And your agent will normally kind of guide you in terms of inspectors. Your lender will choose the appraiser, so that's nothing that you have to deal with. Your agent may have a relationship with a closing attorney. And so, but usually it kind of is buyer's choice. So if you have someone that you want to work with, perfectly tell your agent to do so. And then on the back end, it's really your tax person, because you get a lot of tax breaks when you own a home, and especially that first year when you move in. And there's some things that you can capture with that. So I think if you just kind of go in that order and have that as your dream team, I think you'll be off to a good start. Absolutely.
We're talking about owning a home. So I would like to ask you, what are the different ways to take ownership? Does this vary based on the ownership strategy, whether multi-tenant versus single?
Yes. So several ways to own a home. You can do tenants in common, joint tenants with right of survivalship, and you can own it as an LLC. You can own it as a trust. In terms of primary residence, if it's going to be you and another person, I normally suggest joint tenants with right of survivalship. What that means is if you pass away, the person who's on title gets 100% of the property. Now you can do tenants in common. If one person passes, their 50% share goes to all of their heirs. So if it's me and Belial on title and I own 50%, he owns 50%, something happens to me, it is then my heirs who get it. So it could be 6 or 7 people who now come on title. And that's a headache for everyone, mainly me. And then you can own it as an LLC. You usually have to tell your lender prior to, so they make sure that everything's on the up and up with that LLC and it has its proper due diligence and status and things of that nature. And I would say for multifamily, that's what I would do, or put it in a trust. You can set up a trust, make sure that you go to the right attorney to do so. Please don't get your personal injury attorney friend to put together the trust for you. Go to somebody who knows how to put trusts together. I don't even do trusts, and I'm in real estate. I tell people to go to someone who handles trusts and get that together. And again, you can do that for your primary residence. You can do that for investment properties, especially if you're going multifamily. I think it's best to just make sure that it's in an LLC or a trust. There's a little bit of extra protection with those two that comes with it.
So I would say Bilal is no stranger to competition. Owning over 20 homes by age 25. So I think he's perfect for this question. How competitive should buyers expect the process to be?
Well, in today's market, fortunately, it's kind of stabled out a little bit. If we was talking 2 or 3 years ago, it was extremely competitive, almost like crazy, 60, 70 offers on a property and just throwing prices on the wall, whatever stick, no appraisal contingencies. But today, it's competitive in a different way. It's competitive to, really know how to write that offer in a way. You have some room to make negotiations right now. Sellers are willing to make a certain amount of concessions, but you don't want to price yourself out of it and say, all right, well, let's slow it down. Let me just house listed at 300. Let me offer 200. We're not in that market. Yeah. So you want to counter on things like, some of the other terms and concessions, so if you need to get, you want to put as less out of your pocket, as possible, and maybe just offer that full amount, but ask for 5 or 10,000 in closing costs, or if it is competitive, if they say you're in a multiple offer situation, that's when you know that it's competitive. You may want to, offer the list price or above that if you're trying to get concessions, or should I say, money for your closing costs. So it's not as competitive as it was a couple years ago, but still slightly competitive, especially for the right listing. When an agent lists it right to start out with, then you're going to get a lot of interest on that property.
So let's dive a little bit deeper at a microscope level. And Jordan, I'd like to ask you this question. What does the Atlanta market currently look like for first-time buyers?
The Atlanta market right now is very interesting for first-time home buyers. I work with a lot of the different entities in the city of Atlanta, and I was actually just speaking about some of the properties that I'm seeing what we have for affordable housing. That is, maybe a one bedroom that's 640 square feet, but that's running about, $199. 640 square feet is not a lot. And some of them don't have parking, but this is just what we're trying to do as far as, first time home buyers, getting them into home ownership. Some areas, it's less than desirable, but you're going to get home ownership. Again, that minimalistic living is a theme because we don't have a lot of space. The one thing that I'm making more of is land. Right. So we're trying to put as much in as little of space as we can, but we also want our first time home buyers to take advantage of that benefit. So it's very interesting because at the same time, you get a lot of rehab properties. Right. And so they are priced maybe about $199, $299, but you might get more space. And, they may want that. I was actually speaking earlier, and I was saying, for someone like me who grew up in a home, right? So when you grow up in a home and, you get out on your own, you think, at least I'm going to get something like my parents had. But the market is so different today that you may not, you may get something a little smaller to get started. And I need all first-time home buyers to really take this in. This is your first home. It is not your forever home. Okay, this is to get you started. You may be in it a few years and it may be time to move on because that 640 square feet may be too small. Life starts to change. Then you make the decision. Do I sell this home? Do I rent this home out? Now we start talking about, bringing in some extra income, but this is just the first home. So it's just, let's get you in home ownership, and let's utilize the programs that's out there for the city of Atlanta as well.
So is it safe to say that there are a lot more new constructions that are a townhouse build or some kind of smaller build in comparison to those rehab homes that may have been on a larger plot of land?
I will say in the city of Atlanta, yes, a lot of the new construction are townhomes. They are trying to utilize airspace a little bit, using, again, fit as much in as possible in a small plot of land that they have. So, I'm sorry? Yes, just trying to fit as much as we can in there. So, yeah, there are more townhomes, and that's the city's way of trying to keep it affordable too. That building costs, a lot of the new construction, when they're doing the bigger homes, that's when we're getting into the $400,000 or $500,000 homes. Well, that's not usually for our first-time home buyers, not usually. So, city of Atlanta, they're trying to do as much as they can to get people to move into the city. Thank you. Yes.
That's a brave man.
That's
That's a brave man.
He's okay.
That's a brave man.
Donovan, I'm sure you are no stranger to the home buying process and being able to help others navigate the pitfalls that may possibly befall them in the home buying process. So please tell us, what mistakes do buyers commonly make?
There are a lot. Number one, it's rushing. Everyone wants to be the hare versus being a tortoise. Everyone feels that they got to run to the finish line because all of a sudden it just became the thing. And this is a very critical part of your life. It's one of the first steps you're going to make if you're a first-time home buyer. So why not take your time with it? do the proper research, get the knowledge, and move accordingly. But, me saying that and people doing it are two different things. But what you'll find is that if you take your time, you stop from making a bigger mistake. The other thing is mistakes are, I saw something on TV, or I went on social media, or I went on the internet and I saw this house and I loved it and it looked great. Please understand this. Every real estate listing that's out there, if you ever watch and see, the sky is always blue. There's rarely any clouds in the sky. The house looks amazing from the picture, right? The interior may have a couple shots, but there are no shots of the neighborhood in the nighttime. There are no neighbor shots in the evening or no weekend. How was it before? It's taking your time. People always want to put the cart before the horse versus let's first off look at you. What can you afford? In day and age where we live at, interest rates are high. Of course, it costs a lot to build. Everyone wants to make money off someone, but think about you first. What can you afford? Did you take a real snapshot of yourself? When was the last time you took a moment to do a budget? What are you spending a month? And don't just do a small budget, do an expanded budget. How much for hair, nails, clothes, shoes, going out to eat, gas in a car? What are you spending on the car if you have a car? If you have kids, what's the food looking like? Are we spending every week in the grocery store? We're doing once a month. Then let's talk about what are you spending when it goes to takeout. Then you need to think about, okay, from a realistic standpoint, can I stay within a 31 to 35% of my debt to income ratio? Can I keep me? Because at the end of the day, you want to make sure you're able to pay a mortgage and have money to live versus giving all your money to the mortgage company and you trying to survive. Every real estate agent out there wants to sell a house. They do. And everyone can sell you anything. But is that really for you? People say, oh, I saw this house. It was amazing. Oh, I had this one young lady say to me, this is the perfect home. It's got 5 bedrooms. It's got so many baths. It allows me to put my pool table inside the house. And I said to her, well, ma'am, how much are you willing to spend? And she says, well, I'm only willing to spend this amount. That ain't going to get you that 5 bedroom and that pool table. But I got to have the pool table in the house. Well, there are things that you have to be able to say, I can let go to gain later. But most folks won't think like that. As the young lady said earlier, it's your first step. It's an investment. And you have to think about it at same point. It's an investment. If you stay there for 2-5 years, you look at what equity could be you're going to bring back. Can I sell it? Am I going to be able to turn this around? And then you make the next steps. But a lot of people think, oh, as she said, it's going to be my forever home. You'll be forever in debt. You'll be forever not wanting to be able to get rid of it. You'll be forever sick of it. So therefore, you have to think about it from a standpoint of, I need to move the right way, step by step, not running all the time. Rushing will make things worse. Not thinking about your finances firsthand, not looking at your budget, thinking about the things that are going to keep you in the home, not just for a year, 2 years, but for 5 years, and then put you in a place to buy a better home. And majority of the folks living in Atlanta, last time I checked, are single. Okay. After COVID, most folks got divorced. Right. But we have a lot of single first-time home buyers who are going into homes. And what we're noticing is that once you get in the house, you're in the house, and then you start dating, you meet that next person. It's like, oh, this is it. You got a ring. Now it's time to sell the house. So you're thinking about it as your first step. This is for me right now, but where am I going to place myself down the road?
You started to touch on some very, very core financial habits. In case there were any more, I want to ask you this follow-up question. What financial habits matter most before applying?
First, take an opportunity to look at your own credit report. You can always pull a free credit report. We offer that once a year. You're always able to go and pull other credit reports. Look at, what you've done. Every person here that's dealt with mortgages, anyone in the audience will tell you, what you've done. You got to address that first and foremost. A good point someone said was, how you think a lender is going to give you a $300,000+ mortgage if you can't pay Verizon and that's $138? You got to think about what is it. And there are various programs that allow home ownership. I know for my program in particular, NACA, we don't care what your credit score may be, but we are going to look at your credit. We want to set you up for the next steps where you can be in the home and you're growing versus staying stagnant. And like my father would say, pond water don't move. Okay. So you have to think about first your credit. Then the next step you want to look at is your budget. What actually can you spend? You want to think about ways where you can say, okay, can I reduce this? Because in actuality, if you act like a homeowner while you're renting, when you become a homeowner, it's nothing new to you. It puts you in a better mindset. I always think about this. I have a 13-year-old son, love him to death. And, doesn't want much, straight A student always. And he'll sit back and he plays the game, which is the Roblox. And he'll say, Dad, can you give me $20? Can you give me $20? And I'm like, okay, you get $20. You've earned it. He knows. For me, I'm a different type of dad. I'm a different parent. I always tell my son, your job is to go to school, good grades, and represent your mother now well. That's your job. You do that, you get rewarded. And he gets rewarded. So it's one particular day he comes back to me and he's, just mad. I said, what, you lost the game? He said, no, somebody hacked my account, took all my money. And I said, so what you going to do about it? He said, well, I'm not going to ask you for no more money. I said, what you going to do? He said, I'm going to get on this system. I'm going to get with whoever the provider is, and I'm going to get my money back. And about a day later, he came back. He said, I got my money back. Knowing what you want, knowing that you're going to be determined to go get it, that's where you have to be at. You have to be that way in this market today. If you go fall for everything what someone's going to tell you, you're going to fall for nothing. But if you're standing on your own and you realize, hey, this is what I want. I want to be a homeowner, and I'm not going to take no for an answer. I'm going to do everything I can. That means I'm going to get self-education. I'm going to go out there and I'm going to make sure I'm researching them. I can afford this. Then what you'll find, the end result is you have a nice product, and you'll be able to walk into your house, wherever many bathrooms, garage, every day, and you can feel proud about yourself. But you can also walk out saying, you know what? I just did something, and I did it the right way. And you'll find that will pay off for you years later.
Wonderful answer. And since we're talking about what we can afford, Joanne, I'd like to ask you, fixed rate versus adjustable rate, what should young professionals consider?
Well, no, not too much, because you should consider what your goals are. All right. So you said a young professional. All right. So I don't discourage adjustable rate mortgages. All right. Fixed rates, everybody understand fixed rates, right? That's going to be your rate through the life of your loan. But an adjustable rate may get you in with a little bit. If you can. Thank you. I have a lot of alarms. It keeps me on task, y'all. I'm sorry. But the adjustable rate is something that may get you in with a little bit lower rate. And it will be fixed for a fixed period of time before it will adjust. Well, you got to know, what are my goals? So I'll give this example. I've had people that come and say, hey, I'm going to be stationed in Atlanta. I'm going to be here for the next 3 years, but I want home ownership while I'm here. Then we definitely can talk about an adjustable rate, because they know I'm only going to be here for 3 years. So let's talk about what that adjustable rate looks like. That's going to get them in a little bit lower rate. It's fixed during that period that they're here. And if by chance, after those 3 years, they decide, no, I decided I am going to stay, then we look at getting them refinanced into something fixed if they would like that. Okay, so we got to know what your goals are. How long do you plan on being in Atlanta? How long do you plan on staying in that house? So remember I told you earlier, you buy that first home, and you say, I'm only going to live here 5 years. Maybe you do look at that 5-6R. Okay, it's going to be fixed during those first 5 years. If you know that's my goal, I'm definitely not staying here longer than that, then let's get you into something. An adjustable rate would be good for you. But if you know, no, I'm probably going to be here for a while, it's going to take me a little, I'm not even sure, what my next step would be, then a fixed rate is what we should go with. So they have options. It's all about what your future goals are going to be.
Speaking of planning for the future, how much money should buyers expect to have saved beyond the down payment?
Okay, so down payment can come from a couple of different sources. All right, but I would say if you're going to save and you have your down payment, then you also got to remember you got closing costs. All right, that could be anywhere from 3 to 6% as well. So you're going to save your down payment, you're going to save for your closing costs. Now, keep in mind, yes, there are a lot of products, a lot of programs. You may not put any money down, but you're still going to need money to close. And we like to see you have some reserves, right? So again, we don't want you to use all the money to buy the house, because how are you going to move into the house? How are you going to live there after you get there? What if you get there? And I give this example of myself. This last house that I just bought, I moved in, move-in day, my air conditioner went out. It's my home. It was really crazy work because we're moving and we're hot and we're trying to figure out why it's so hot in here. The AC worked when we did the inspection, no problem. It went out as we were moving in. Okay. Luckily, I had a warranty. They came right on out. Next day, took care of it. Right? But it was hot. It was so but if I didn't have the warranty, guess whose house it is? Who has to take care of that AC problem? Absolutely. So you need some money. You can't put it all into purchasing the home. You've got to have some reserves. And that's why we require reserves. We want you to know that if in case something happens, you have some money set aside that you could take care of it. Yes, yes.
And this is a great segue into the next question I have for Bilal. So we're talking about this home ownership preparation. So Bilal, I'd like to ask you, what should renters transitioning to ownership prepare for? What are some of those hidden gotchas that they don't expect when being a renter to a homeowner?
Well, just as we were just mentioning, having some reserves, because when you're a renter, you just call that owner or that management company, hey, something going on with this, something going on with that. Versus once you get in that house, as we just mentioned, it's on you if you don't have a home warranty or it's not covered under the home warranty or insurance. So just, having reserves for those things and, just the pride of ownership when you actually own, and knowing that you have to take care of all the landscaping and everything else that happens, with the home. So just being prepared that way.
Could you talk about the differences between HOA and a non-HOA?
The difference between an HOA neighborhood and a non-HOA neighborhood. I mean, some people like HOAs, because it keeps things, a certain way. You don't have to worry about somebody painting their house hot pink right next to you because it might be in the covenant and the restrictions that you can't do that. Versus a non-HOA, you have a little more flexibility and freedom with what you want to do, but you also have some flexibility and freedom in, just the ownership itself. There may be a little bit more amenities, a common area pool and things like that are shared in HOA communities. It really comes to a personal preference. Personally, I don't, wouldn't like a HOA community just because I like to have my freedom, and not to keep paying somebody every month. However, some people like HOAs because they cover, certain things. So the difference is certain amenities things are covered under the HOA, but you have the covenants and restrictions up under the HOA versus not having them without it.
And so we're talking about this ownership. We're talking about the importance of insurance. Christine, I would like to ask you, what is the importance of title insurance?
Sure. But first, let me say I'm an HOA person. They do my grass. I don't have to do it. A1. And I have a condo, so my structural insurance is in my HOA, so it's all good. In terms of title insurance, it is, I think at closing, one of the most important pieces that a lot of people don't know about, but could save you so much money. It is optional for you to buy an owner's title policy. You want to know what's not optional? That lender's title policy, because the lender knows that something may go wrong with title and that they need that insurance policy to protect themselves and their investment, because your home is their investment as well as yours, right? That loan that they gave you is an investment. And so that owner's title policy, it's optional. So people see that, they see, oh, I could take a couple grand off of my my down payment. Let me just do that because it'll cover my movers, right? But what people don't realize is your title policy is there to cover errors. I'm a closing attorney. I fix things that have been done prior to me being born, prior to my mother being born, sometimes prior to my grandmother being born, and she was born in 1927. Okay, that is my job, is to fix the issues that other people have created. And sometimes you may not find it on the first go round. So you are protected, and depending on the policy that you have, you're protected for past mistakes and also future issues. I know an enhanced policy that we offer helps with forgeries. So people trying to take your home, it helps with that, right? But this is the other thing. What insurance policy do you know that you only pay one time? One time. When you purchase the home, that's the only time you pay it. And it lasts the entire time that you own the property up to the purchase price of the property. So for whatever reason, wild, you have to be removed from the home, you get your money back. You have a team of title attorneys with that title insurance company helping you fix whatever issue they find out later. I assure you, if you try to hire me or one of my colleagues to fix something, it's not going to be your title insurance premium. It'll be much higher, right? Because who knows how far ahead you'll find that issue. It could be 20 years. When you sell that property, that's when you figure out the issue. The law firm's gone. That lender may be gone. So who do you talk to? It's the title insurance company. And then the other thing is your title insurance, most of them also pass on to heirs. So if I purchase a home and I plan on giving it to my children, they can pull up their title policy, and if there's an issue, and also be covered. So and I'm not saying that it's a cheap thing. It's a couple extra $1,000 sometimes, right? Depending on the purchase price of the property. But I think it is one of the most important things that people just kind of gloss over, and it's a money thing. And trust me, I understand the value of $1. I got student loans at the wazoo. And so I know how easy it is to just, oh, it's optional, let me take it off. But I can't tell you the amount of times I talk to underwriters, other closing attorneys, and try to get the title policy so I can get something closed, because that could prohibit you from being able to sell your property. And it could be that first home that turns into your forever home for a little bit, because you have to pay those attorneys to figure out the problem. So it's extremely important. I think my paralegals there, we ask for title policies 2 to 3 times a week on all of our deals.
And if it's an investor transaction, ooh.
Yeah, most of those.
And not to interject, but simultaneous issue credit.
Oh yeah.
You're paying for the lender policy, you might as well get the discount on the owner policy at the same time.
That's also true. It's a lot cheaper to do it at closing because they figured there's no issue yet. But 20 years down the line, when you figure out there's an issue and then you try to get the title insurance, they're like, oh, that premium's going up. Yeah. So the further away you get from closing, the more that premium's going to go up, because that's the possibility of them being able to find an issue. So yeah, it's very important.
Thank you for that very, very detailed answer to that question.
Sorry.
It's okay.
You asked an attorney to talk.
This last question, we're just going to do a little bit differently. I'd like everybody to chime in. So hindsight is 2020. I'd like each of you all to answer. Would you do anything differently with your first purchase?
Well, since I have the mic, I'll start. No, I think I did pretty well with my first purchase. Thank God I purchased before the pandemic. So my house was a reasonable amount. My mortgage was under 1,000. I was, yeah, it was good. It was a good time. I know. I mean, but I also bought in Decatur, unincorporated Decatur. We're talking about neighborhoods. Inside my gate, nice. Outside my gate is a little rough. You know, I bought a 3-2. I'm single, no kids, fine for me. I have an HOA that handles my lawn. It's fantastic, but I'm also the beneficiary of generational wealth, right? My mom purchased a second home and I moved in. I saw when I went to Emory, a lot of kids, that's what their parents were doing. And so I have student loans. My debt to income ratio is crazy. If I talk to Joanne right now, she would laugh at me and be like, "Oh, girl, we can't do nothing for you." Okay. But the interest rate's high now. I got a 3.8. You know, so I tell people that all the time because people are like, "Oh, you should just tell them you bought the house. You should just tell them." But it's like, no, this is something that people don't realize is possible. Your parents can help you purchase a home, not just by being a co-signer, but by purchasing a second home. She was living in New York at the time. I was in Atlanta. It's far enough that it qualifies. And she knows I like to pay my bills. So she knew she was going to get the best tenant ever. And so that's now another asset. She moved from New York, purchased her home in Florida, and now she still has 2 homes. Mortgages in her name. So she, you know, I'm helping her credit as well. So there's just different ways to move about purchasing a home. It doesn't always have to be the straight and narrow that everybody thinks it is. Yeah.
All right. Well, similarly to Christine, I did a lot of things right. I identified the home. I had a tenant in the basement apartment before I moved in. I moved my other colleague in the other rooms, paying me $500-$600. You know, I had it upstairs. I had somebody that moved up there that was paying me. So the house was, pretty much covered. And like I said, I bought right over here in Grove Park or West Midtown, but us from Atlanta, we used to call it Bankhead back then. So, it's a really thriving area. But if I had to say one thing wrong, I probably would have done differently, but just speak to more mortgage professionals, more lenders. Everybody is not like, Joanne. Joanne and I worked together for many, many years, closed many transactions, a lot of integrity. And I know they recently put a lot of, regulations on what mortgage brokers and lenders can charge. But back then, it was like the Wild Wild West, 2003, 2004. You're coming from the Nina loans to the Ninja loans. For those that don't know, Nina was no income, no assets. They were selling people houses. Then they went from that, the Ninja, to no income, no jobs, no assets. I'm like, what? As long as you had a credit score, you could, and a pulse, you could get in the house. But, I had, income, but this mortgage broker wanted to get all creative. Oh, we could do this. I said, no, just go stay there. I'm cool with that. So he did a lot of things, and I got in the house. But long story short, I paid, once I know, I paid like 4 points. Exactly. He got 4 points out, so that's pretty much like 4%, that he was able to make, on originating that loan. Not to count anybody's pockets, but, I could have used that little bit extra.
Okay, first home. I'm gonna say the first home I bought on my own. It was after I got divorced, so it's me and my daughter. I bought a HUD home, $100 down, $85,000. My mortgage was $576. I kept that home for a while. When we outgrew that home, remember, first home. When we outgrew that home, I rented it for a while. A couple years I rented it, and then I decided I don't want to be a landlord. So I sold it to another single mother, and I took that and I bought 2 more homes. And that started my journey of flipping properties. All right, so again, you got to start somewhere and you grow. And I flipped about 8, 9 properties over time. And now I have my daughter who is now grown in the business. But you got to start somewhere. All right, so I think I did pretty good on my first property. Yep.
I'm gonna tell you now. Shit. Mine didn't happen like that. Sorry, everybody's so nice. Mama helped, and I got this. Family in my business too. No. Mine was a rush purchase. I was working for City Mortgage at the time in Detroit, Michigan, and they brought me in as they gave me housing, car. It's great, good money. And that was when we were doing the refinance boom, just big. And then one day got pulled in the office and said, "Hey man, look, you got to find a place to live." And I was like, "What?" And it was, "Yeah, we give you 30 days." So just so happens my credit was good. I had to come in with a whole bunch of money for, closing costs and down payment. And it's Detroit, Michigan. So, you find a little, hole in the wall. That's better than the wall. That's just how it was. So I found this, I thought was a great community right behind the school. But a couple months later, it was like the OK Corral. I learned how to duck and dodge real quick. And I learned in Detroit, the police don't come when you call them. They just don't come. But I got, I was in that house for maybe 2 years before I moved back to Georgia and took the position with NACA. So that was over 21 years ago. And it was funny because I rented. I did because rushing. I said I wasn't going to do it because if you don't know the CEO of NACA, Bruce Marks, when he tells you he needs something done, you move. It's just his way about you. So he said, "Hey, I need you to come to Atlanta." And I was like, "Well, and he was like, "Well," and I said, "Okay." So I literally went in and gave them a 2 weeks notice with 3 days left, like, "Hey, look, I got to go." Packed up my house, put it on the market, came to Atlanta, and I rented for a little while. I then bought my house through the NACA program. I took some time. I bought a foreclosure, $83,000. NACA has a rehab program. So I was able to rehab, put hardwood, granite countertops, paint, do all that. And when I closed, my interest rate was 2.75%. My mortgage, principal, taxes, interest, everything combined was $627 a month. That was my mortgage payment. So it was less than what rent would be. And I said to myself, this is going to be my little stepping stone house. This is, it was for me. But as life be lifing, things happen. And before you know it, I got a little one. And so I was like, well, so I was blessed because when it was time to sell a house, at the time we had the mortgage, bubble burst. You couldn't sell water in the mortgage industry at that time. So I was holding on to it. And one day, my neighbor, he would rent his house out. And I saw the young lady taking the trash out to the street. And I said, "Hey, came out, welcomed her. Told her, "Hey, you had a great landlord." She said, "Landlord, I just bought this house." I said, "You did what?" She said, "Yeah, I just bought this house." It was no for sale sign. I went, looked on MLS, it sold. So I said, "Well, you know what? I'm going to throw mine on the market, see what happens." 9 days later, I'm closing. House sold just like that. And I made more money off of it than what I paid for it. So, you move on to the next one. But if I could do it all over again, yeah, I would do it a whole lot better than the first house I bought. I would.
Thank you for all of your detailed stories. I know what to do and what not to do now. So I'd like to open it up to our live studio audience. If there are any questions in the crowd, please raise your hand.
Thank you. I guess this question may be best suited for the attorney, but I'm always curious to know investment property. Do you put it in your living trust? Do you put it in an LLC? Do you put each property in a different LLC that all rolls up to a holdco? Like, what is your best recommendation?
It depends on your goals. I know an attorney, it depends. Wow, innovative answer. But it really just depends on your goals. Is it, I'm going to have a property for each of my children and each of my nieces and nephews. So you may put it in a trust because it's a long time hold, right? If I know that I'm going to build a huge portfolio and I want everything streamlined, you might do an LLC for each property that you purchase and then have a holding company on top, right? It's possible that you use the same company over and over again and you just buy them up and hold them in there. It also depends on your liquidity. It depends on your personality type. You know, can you keep everything separate? Is it easier for you to keep everything separate? Sometimes it just may be the cost of just, if I put everything in one pot, it's never going to work out for me. So I need, okay, 123 Lucky Street is in this LLC. And then I have 123 Main Street on this one. And that's how you do it. That's how you make sure the rent rolls are good, right? Make sure nobody's skipping out on rent and you just forgot because the money is just coming into one account, right? So it really just depends on who you are as a person, your long-term goals, liquidity, and kind of what you're aiming for. Is it I'm pulling together some money so I can purchase more? Is it I'm just buying these, holding them? I might rent them out, might not, but my goal is to give it to X, Y, and Z. Those things can help you determine, like understanding your future goals can help you determine what your current strategy would be. But this is the beautiful thing about your business strategy. It can change, right? So the day that you can decide tomorrow to change it up, 10 years from now to change it up because your goals may be different, right? So you don't have to stick with one thing once you start.
If you have title insurance, does that cover if you wanted to move the ownership from like one entity to the next?
Not really. It depends on the LLC structure. So if I purchase, say it's me and Bilal, we purchase in an LLC and we're the only two people and we move it to another LLC that it's just us two, it usually can pass. It depends on each policy. But again, you just have to read the policy because some of them just don't allow it. Some of them do.
I would say to that, a lot of people familiar with the quick claim deeds. And if people say, I just quick claim it to this entity and that entity. But they don't know that actually voids the title insurance when it takes just about the same amount of energy just to do a regular warranty deed transfer versus a quick claim deed, which keeps it intact.
Mm-hmm.
All right, thank you.
I need to stand or I can just sit? You can sit. Okay, perfect. Good evening. Thank you very much, panelists, for an outstanding job you've done in terms of sharing information. But I would like to address my question to Bilal. As an investor, what zip codes are you currently investing in or looking to invest in? And my second question is, do you think it's a good idea to buy like a duplex, live in one, and then move out after a year before you ultimately buy your dream home? Explain that process or describe that process to us, if you would, please. Thank you.
Yeah, absolutely. I start with the last question first. Duplex, triplex, quadruplex is always a great way, and they're considered still single family. And so you can qualify, for FHA or, conventional type home. That's a great option for a home, first time home buyer or even a repeat buyer, so that those units can pay for, the home itself. I actually just sold a duplex yesterday, triplex, should I say. Yesterday, literally. It was, but as far as the zip codes are concerned, right here where we at, 30318 is one of the most thriving zip codes in Atlanta right now because of a lot of the things and development that's coming over here. But I like all of, really West Atlanta. I'm a little biased because I'm from the West Side. But that's where, a lot of focus is being put. If you notice and listen to the announcements from the mayor's office on down, the Reinvestment Act right here in 30318, 30314, 30311, 30331 is good. Southwest Atlanta, a lot of people snooze on that, but I think Southwest Atlanta 30331 is good. Going to East Point 30334, as well, 30349 over that way as well. Those are all good zip codes. But I mean, that's if you want to stay close to the west side, going a little bit south. But then, going outside of the city, there's some opportunities as well, indicated. But I really like these areas over here because of the, the appreciation that's, happening. I mentioned I bought my house right down the way. It was 150 when I bought it. Same house now worth almost $500,000. And, I've been paid my house off 10 years ago. So I'm sitting on a nice little bit over there. But I mean, as far as investment, I'm looking at other areas because when I was telling everybody to buy in Atlanta 20 years ago, a lot of those people now, I'm working with them. I'm, building subdivisions, doing a lot of projects. But I'm looking at other areas, in Alabama, Birmingham, and some other places that have some nice cash flows, right now. Kind of like what Atlanta used to be. So if you're buying something for $50,000, to $80,000, that might still be rented from $800 to $1,100. It's pretty good cash flow. You can't really get much of that in Atlanta right now, but it's still some great opportunities in those zip codes.
Thank you. I think we have time for one last question.
So I know you guys were discussing that people nowadays are rushing to get into homes, but with the current housing market, what would you kind of say to the younger crowd of people like 25 to 35 looking to purchase a first home and how to maneuver in this market nowadays?
Did you direct that to a specific person or anybody? Who?
So one of the things I've talked to about to my daughter and her friends, my daughter will be 32 this week. So her friends range from about that 25, 32 age range. And that is, I understand home prices are high, but you guys can get together and you can travel out of the country and you can do everything else. So let's pool our money together and go buy you a property together. Stay there till somebody's life changes, and it will. Okay. And then you move on. Or maybe I'll keep it in and you use it as an investment property from that point. But just let's get home ownership. Let's go ahead and get that under our belt. Let's start building some equity, so we can take care of some of those other things that may come along, or some of the things that you may already have, those student loans that's hanging out there. Let's build some equity. And then, when life changes, maybe you can take care of some of those things. But you guys can make time for, hey, we outside. I need you to put some of that money together and let's get some investments.
People always talk about they're waiting on the interest rates, but rent is 100% interest, and so right. And so the slogan I always say, don't wait to buy real estate and wait.
But you always have to have. You think about your deductions. As a young person now, you make a check, but when it's time for tax season, what are you writing off? Where are you at? What's your portfolio looking like? It's almost like the commercial, what's in your wallet? So you got to think about it from the standpoint of, yes, I'm here today, but where will you be at in the end? It's the end game. It's pretty much getting ahead of others, but the right way. Because like you said, y'all like to take y'all trips and y'all like to go party. Okay. And you will spend money on things you don't need. And we all were young at one point. I mean, just yesterday I was 21. Oh, y'all doubt me? But no, it's about, if someone would have had a conversation with me, a year ago when I, was 20, I would have been so grateful because I didn't have that. It's just like our parents, when we were coming up, when I was coming up as a young person, my parents never came and talked to me about credit. I watched my parents balance a checkbook. Nowadays, you don't balance checkbooks. My parents had a philosophy of, we move as one. We do things together. In this day and age, I don't see that people just sporadically doing things. They're going check to check, or they're sitting back here going to a friend, can I get a couple dollars here? But at the end of the day, Where did your money go? What did you invest in? What does your portfolio look like now, and what will it look like later? You know, at one point there was a spur about Robinhood. Everyone wants to invest in Robinhood and do all these things and such. You could still do those things, and you can still have the fun you want to go have, but be a homeowner. Have a credit report that people can say I can respect. You can still drive a respectable car and it still be something that you can afford. Versus everybody want to go get Chargers, want to go out there and get Challengers, and speed up, do donuts all through the street, and you know. So there's just different things that you could do.
Don't be afraid to be unconventional. Like I had my first tenant, because I bought a 3-2. I live in one room. There's 2 other rooms. A friend of mine who's a DJ, his friend was coming to move down to Atlanta for a music career. Stuck him in a room. He paid a good portion of my mortgage for a couple months. He left. I had somebody else come in that I met through another friend. I'm a licensed attorney, right? Everybody would assume that I have this, that, and the third. I'm okay being unconventional. I drive a 2016 Toyota Camry. Okay, me and Onyx gonna be good friends because it's gonna ride out for 200, 250, 300, right? It's already at the 2. But it's okay that everything isn't an aesthetic, right? My townhome isn't an aesthetic. It's nice. It's where I lay my head after I leave out of here, right? But that mortgage is going to make sure that I can live, I can pay my student loans, which are more than my mortgage, and I can eat, and I can look cute a little every once in a while, and take those trips every once in a while. But I make sure that my bills are paid, right? And that my bills aren't overtaking my life. At a time period where that did happen. Never again. That's why I got the house, because the rent was doing too much. It kept on going up, and I called my mom and I said, hey, do you want a tenant that's always going to pay on time? And that's kind of how we got into it. Honestly, I didn't even sign my loan papers. I had to have my friend do it because I was working. You know, I was doing another closing while she was doing mine. But it's the thing of not being afraid to be unconventional. Roommates, tenants, whatever it is necessary to get ahead, do it for a couple years. It's cool. And if people hate on it or feel any type of way about it, they're not paying your bill, so don't care.
This last thing to that, you know, those point. Delayed gratification, you know, not trying to keep up with the Joneses. The Joneses fell off. They done been bankruptcy, foreclosed on, all of that good stuff. You know. You know, but the last well, I had a mentor, and so he really taught me about delayed gratification. He was buying and selling literally 20 houses a month with cash, riding around with a Ford Focus. $200,000 was a slow month for him, riding in a Ford Focus. You know, get the house and then get the car. The house will help you get the car. That nice car gonna hurt you from getting that house. If you're riding around in a Land Rover with a landlord, you're in violation.
I think we have one more quick question.
So really quick, it's a couple of investors in the room, and I just wanted to ask you this. You know, the FIFA World Cup coming up, we got the Super Bowl coming up. And particularly for anybody who want to answer this question, what would you do? You know, in our position, you know, we want to put ourselves in the best position. But like what would be your plan?
Well, you know, if you have some property within a 5-10 mile radius, even more than that, I saw a zip code chart come out. They looking for stuff all across the areas I didn't even think the World Cup we coming. But I guess with 6 to 8 matches, however many we getting, it's gonna be real big. So I would say if you're not already doing like Airbnb or short-term rental, go ahead and get those accounts started now. or if not, partner with a super host or somebody doing management so you can get prime visibility, because people that are going to be willing to come and spend that much money want to stay a certain kind of way. I travel a lot and I go to a lot of Airbnbs, and only took me one time to go to a spot and wake, and the sheets had some throw up on it because it wasn't a super host. And yeah, so it's like, I got to have super host now. And there are people that strictly look for super hosts. So that's why I would say I would partner with a super host to get that prime visibility and list it for somebody that's coming for those games.
Yeah, same. I would say, do those Airbnbs, VRBOs, go ahead and get out there, get your properties listed, so you can be primed and ready when those events come in. Have a couple of different people, they go in different directions with it, but you definitely want to go ahead and be ready, because the events are coming, the people are coming, the money is coming. Don't let the money come in and leave and you didn't make any of it. If you need to. Yeah.
Give them a portion of it.
Yeah.
Hey, let me come.
But be ready.
Oh, yeah.
Well, I want to just say thank you to these stellar subject matter experts we had this evening, from Cadence Bank, from Galbraith Costner, from ARC Realty, from EXP Realty, and from NACA. This has been a wonderful and very informational session, and I hope you all will join us for any sessions we have in the future. As we prepare to sign off and transition into the networking portion, I want to say thank you to all of you all who joined us online to listen to this session, and we hope to see you at the next webinar. Thank you and good evening.